Good day, students, and welcome back again to GADI Academy online class. Last week, we looked at financial institution for which we were able to distinguish between the banking and the non-banking financial sector. We also look at how these institutions contribute to economic growth. Today, we want to look at money and capital market as an instrument of financial institution. So at the end of today's class, I'm sure students will be able to, understand the meaning and the segment of the financial system. They'll be able to define as well as differentiate between money market and capital market. They will understand what are the major functions of both market to the economy, highlighting the benefit of the money and capital market to the economy, as well as explain the concept of universal banking, which we are going to introduce. So, what exactly do we mean when we say what is the meaning of the financial system? What do we mean by the financial system and what are the segments? So financial system can basically be defined as a set of institutions, the market, the instrument and the laws that facilitate the flow of funds in an economy. So this segment, the market, the institution, the instrument and the law do facilitate movement of funds in an economy. So it helps in mobilizing savings, channeling funds into productive investment, and as well as supporting economic growth and development. So the segment when we think of the financial institutions, the financial market and instrument and services all works together to do this great job in an economy. So we will now be looking at the market, the financial market. So what do we mean by the financial market? So like we said before, the financial market is constituted by both the money and the capital market. When we say money market, so money market deals with short-term funds which are typically less than 1 year. It involves instruments like the treasury bills, the commercial papers, and as well as the certificate of deposit. The money market is usually less than a year, so it can't exceed a year. So when you look at the treasury bills as an instrument of the money market, for instance, you will see this. The treasury bills are just short-term debt instruments that are normally issued by the government. So when government are in need of money, they can issue treasury bills to the public. You understand? And when they issue a treasury bill to the public, so to borrow money from the public for a period typically ranging from, let's say, 31 days to 364 days. So it cannot exceed 364 days because it is normally less than a year. So what are the key features of the treasury bill, for instance? So it is always risk free because it is backed by government. So it is also so that a discount are redeemed at a face value. So for instance, if it is so that let's say that 5,000 naira, so the face value might just be 5,000 plus 5,000 naira, which is 100,000 naira. So if you buy treasury bill, let's say at 95,000 naira. At the end of the transaction, so the face value might just be 100,000. So you'll be getting extra 5,000 naira as your take home. But though a treasury bill, it is a low risk, low return system so of investment to the public. Uh, there is purpose and importance of treasury bill. So government can use it to fund short-term budget deficit. It can be used as a safe investment for individual institutions. It's also a tool for regulating money supply and inflation in an economy. And this is just referred to as monetary policy. So when government embarks on monetary policy of controlling the circulation of funds in an economy, the instrument they use is known as the treasury bill. Through the central bank, they can do this. So what is commercial an instrument of under the money market? Okay. Commercial papers are just short-term debt instruments, just like the treasury bill. But though commercial paper are normally issued by large corporations, large companies to raise funds for meeting working capital needs. So if a corporation deem it fit that okay, for us to be able to meet up with our capital, the needed capital, so they can raise these commercial papers, so which typically ranges from 30 to 270 days. So that is also less than a year. In commercial papers, you can think of key features like it is unsecured because there's no collateral. So only credit worthy companies can issue them. For instance, Dangote, a company like Dangote Industry may issue a 90-day commercial paper, let's say of 1 million naira at 950,000. So where investor will now earn like 50,000 in 90 days. So that's an example of how commercial papers can be issued. It is normally issued by large corporations, and that is why I use the example of Dangote Industries. So it is offered at a discount and redeemed at a face value, just like the treasury bill. So it is being offered at a discount, but there is a face value which is greater than the discount rate. Okay. Higher yield treasury bills, but also has a higher risk. So relatively to the treasury bill. So the purpose, like I said before, is for corporations or companies to raise cost-effective way, to raise short-term funds in a cost-effective manner. So it is also attractive to investors seeking higher returns than the treasury bills. Let's look at the capital market and what does it mean in the financial system as we've been discussed. So before I said the capital market is with medium to long term funds, normally more than 1 year. So I traded instruments like the bonds, shares, and the ventures. So in the capital market, for instance, individuals and institutions invest in various financial instruments. So it could be either to raise funds or to generate returns. Three common instruments that a capital market are the bonds, the shares, as well as the ventures. So which are critical for financing businesses and government projects. So when we let's talk about the bond for instance. So a bond is a fixed income instrument which represents a loan made by an investor to a borrower. So typically corporate or government. So it has a maturity date and pays periodic interest. So this periodic interest is called uh, coupon. Okay, so bonds has features like fixed interest payment, which is called coupon. It has a maturity period, usually long term. It has lower risk than shares. It is traded in capital market, not in the money market. Issued by companies, state or the federal government, for instance. So there are about 2 or 3 types of bonds. We have government bonds, like the federal government bonds issued by government to finance budget deficit, for instance, or infrastructural deficit. So we could also have what we know as corporate bonds. So these are issued by companies to raise long-term funds, as well as municipal bonds. This is issued by local or state government. So the bonds has the benefit of stabilizing income from interest. Uh, it has lower risk for investors, and it's used to finance capital projects. So under the capital market as well, we have what is known as the shares. The shares, or let's say stock, as you may understand. Shares represent unit of ownership in the company. So when a person buys shares, they become part owners or shareholders of a company, and they are entitled to a portion of the company's profit, so which is dividends of that company. So it has features like ownership, so depend on company ownership of in the company, dividend, which depends on the company profit. Then the voting right, you can have a voting right. Your share can be bought and sold on the stock exchange. The value fluctuates with company performance. So and there are types that we can say. We have ordinary shares. So under ordinary shares, which is known as equity. So it carry voting right and variable dividends. So it depends on what the company is declaring. We also have preference shares. So what are the benefits of shares? So number one, it has potential for high returns. It has dividends and capital appreciation. You have ownership and voting rights. So lastly, under the capital market, we can begin to look at debentures. So what do we mean by debentures? So a debenture is a long-term loan instrument issued by a company to borrow money at a fixed rate. It is not secured by physical assets or collateral. So it has features like fixed interest rates, no ownership right in the company. It can be paid before shareholder in case of liquidation, and usually unsecured, unlike bonds. Can be convertible, like it can be convertible into shares or non convertible. So the basically we have two types. So we have convertible debentures and we have non convertible debentures. So let's go further with a tabular representation of how we can represent the differences between the money and capital market. So in this table, we can see that for duration, so money market has short term, so it is normally less than a year, and while capital market has long term, which is normally greater than 1 year. Apart from that, for purpose, so in terms of the money market, it has it is very purposely for liquidity and working capital. why investment why capital market has investment and capital formation as the purpose. So what are the institutions, trading in money market and capital market? So in money market we have the central bank and commercial banks. They are the actors in the money market. While for capital market we have the stock exchange as well as investment banks. And what are the instruments like we have discussed before? We have the treasury bills, we have the commercial papers for money market. While in capital market majorly we have shares, bonds as well as debentures. For risk level and return. So money market is synonymous to low risk and low return, while for capital market there's higher risk and higher return. So next, let's look at the benefits of financial markets. So for money market, as we have said earlier, so it provides liquidity because it is short term. So it is easier for it to provide liquidity, unlike the capital market which is long term. So it also supports monetary policy that like it can be used by government to control the the volume of money in circulation. So it supports monetary policy, especially through the treasury bill. So it has a short term financing purpose. So if the purpose is for short term, so it provides that opportunity. So for capital market, it mobilizes long term funds, it encourages investment because of its long term nature, and it also promotes economic growth. So lastly in this class, we'll be looking at the universal banking. So what do you understand by the term universal banking? So on your screen, universal banking is a system where a bank offers multiple financial services. So when a bank offers multiple financial services under the same roof, so that such bank is undertaking what we know as universal banking. So a bank can be doing commercial banking, investment banking, insurance as well as asset management. So such banking it can be referred to as, or such service can be referred to as universal banking. And the benefit ranges from one-stop service, opportunity, improve efficiency as well as customer confidence. Uh, at this point, we have come to the end of this class, but not without asking ourselves. So, who can identify a product from the money market and capital market? So, if you can do this, just in the comment below, state the answer to the question. And you can as well go further to explain their uses. Once you identify a product from the money market, for instance, and you also identify a product from capital market, explain their uses. Let's go further to look at some other questions. So this is homework. So we have about 1, 2, 3, 4, 5 questions there. So the first question, what do you understand by the term financial system? So what is financial system? So what are the segments that are constituted by the financial system? So list two instruments that can be identified with the money market. So mention two differences between money and capital market, as well what is universal banking. So we just define what a universal banking is. So state one benefit of the capital market. Finally, let's back on this research work. So you are expected to write a short essay and you're going to submit that or maybe on a WhatsApp platform. So what you expect to write is how the capital market can help you finance your future education or business idea. And we want you to write this as an essay. I want to see how uh, you are thinking like an economist. So by next class, we'll be looking at a new topic, which is money and inflation. So what is money? So what relation does it have with inflation or deflation in an economy? How does inflation affect the economy? How can deflation can affect the economy? So and so on and so forth. So see you next class and thank you for staying glued to this class. Bye.